logging in, however way you are joining us today. Thanks for those returning people that have come. This is about our 5th or 6th webinar. So real quick, not to get too into it, but my name is Corey Lebrecq. I work at Nutmeg State Financial. I am the manager of community employee and development here at the credit union, and I'll be kind of emceeing the webinar today. And I'll be helping out Shane Dugan, who's our AVP of lending. And he will be, as you guys know that have been a couple way through these, as the expert in these. So now, couple ground rules, because we got a lot of people joining us today. We are going to be having everyone muted. That's besides Shane and I, just so we can get through the material. And then we'll be utilizing the chat functionality, which is in Zoom. And I'm going to send you guys a link right now that you're going to need here in a second, if you'd like to follow along with certain things. So I just put a chat with a link. You guys should see it in your Zoom chat. And what that will do is actually bring you to one of our website pages. And at the very bottom, it will have 2 links called webinar materials. So you guys can have this PowerPoint slide at your disposal, as well as an application Shane will be going over as well. So I put that in the chat, and I say hi everyone as well, just so everyone can see that. So as regards to questions, we have a lot of material to cover today. So we're actually going to hold all questions until the end of the webinar. So we're going to let Shane go through the material from the start to finish. And at the very end, we'll have time for questions through the chat. So just want to lay out those couple items there. One other thing, if you do have to leave or you get distracted or you just need to refer back to something in this video, we will be releasing this recording directly after we're done here. It'll be uploaded to our YouTube channel, and then we'll share that on all of our social media platforms. We'll make sure to give you guys those links at the end as well. So other than that, Shane, if you'd like to get started, I will shut up now.
Sure. Hey, everybody. It's nice to see some familiar names, some familiar faces for those of you that have video on. As Corey had mentioned, you have the ability to download both the slides and the application. I highly recommend, hopefully you're not calling in. If you are calling in, you definitely will want to circle back to this and see the visuals. Unlike the last couple that I've done, this is very math heavy, unfortunately. So I think, sometimes having visuals in that aspect is just going to be more helpful. And then I would definitely encourage you all to also bring up the application that's in there too. And I say that because we're going to be hopping back and forth. There's a lot of the application itself that feeds into other parts of the application. So in an effort to try to just look at the actual application and be able to kind of keep pace with where we are, I would definitely encourage you guys to download that and try to just, split screen or something along those lines. I certainly won't take offense to having my face minimized or anything like that. So we'll get started. And as Corey said, feel free to chat questions in there, but we'll answer them as we get into the at the end of the presentation. Okay. All right, so this is an update to the PPP part, specifically focusing on the forgiveness. I went over some of the basic parameters in the last one, but over the last couple of weeks, the SBA has released additional guidance. And then lo and behold, just as you think you're ready for these types of presentations, the government opts to update all of it and turn this on my head this morning as well. So they passed some legislation last night that is sitting or will be going to the president. So as you guys can see on there, many of these rules, as it did in the application part, continue to change. Things continue to be very fluid. This is our best attempt. This is my full disclaimer to this, to try to get the information out to you guys, the best that we can. Obviously, I've tried to update the information today based off of what came out. However, that's just a bill. And what generally happens is the bill will get signed and then guidance will be issued. And that guidance is actually what tells us specifically how to do what's within the legislation. That obviously hasn't come out yet. The bill hasn't even been signed off by the president. So, I'm doing my best to, I think, reference certain aspects. You're going to see me change. I was going to specifically focus on the 8-week period pretty significantly, but I'm going to reference really covered period at this point. And I'm going to say that because it likely will turn into a 24-week period that you're able to use the PPP fund. So initially it was that 8-week period after you ended up getting the loan. We'll cover how they switched the covered period to allow you to sync it up with your payroll cycle. But now it's changed again, and now it's a 24-week period. So I think that's definitely a great thing. A lot of these changes are helping ensure that you guys are going to get the full forgiveness, or at least, as much forgiveness as you possibly can throughout this process. So fingers crossed, obviously full forgiveness there. But some of this stuff is going to change. You guys can see my screen, a couple of highlights from the bill, and this is not all encompassing. Again, that covered period that I'll refer to is likely being changed to 24 weeks. Or if in the case you get a PPP much later on, December 31st, 2020, whichever is earlier. It will look to change the use of payroll, use of the proceeds to need to at least now be 60% for payroll costs, which means you can now use up to 40% of the proceeds for those other expenses being rent, mortgage, utilities, that type of stuff. So you've definitely got some more flexibility in that case. However, there's still some guidance as to what does that mean for reducing people's salaries or that type of stuff. So we'll kind of get into that throughout it as well. The deferral period, what that means is basically the SBA was giving you until September initially to not make any sort of payments or anything like that. And that basically should give you the ability to request forgiveness and have that happen prior to ever needing to make your first scheduled payment on November 1st, which is what I think it was. So that's been extended as well. So essentially, if you are still waiting on determining the forgiveness part, it sounds like the deferral period will continue to just expand out for you so that you won't have any forgiveness until you get notification of whether or not that is forgiven and how much is forgiven. Okay, and that obviously gives the lender some more time to work on that stuff for you as well. It allows you to extend the time frame for which you opt to request that forgiveness. So you've got a lot more time in that aspect. One housekeeping item as well, and this is something that continues to came up on the origination side. Just be very careful about where you're getting your information from. There's a lot of bad information out there, and there's a lot of old information. So I definitely encourage you guys to, whenever possible, specifically go to the SBA's website and focus on what is on there. That is usually the most relevant, up-to-date information. Obviously, we try to provide that as well. But if you're just Googling things, chances are, we have a funny joke here that if your presentation's an hour old, it's probably partially wrong. If it's a day old, it's completely obsolete. And today is a great example of that. I literally spent the day trying to get things updated. So just be very careful of that, because obviously when you're Googling things, you do get older information that might not be up to date. Okay. So moving quite along. So hopefully these are what we get across today to everybody. Okay, again, understanding the forgiveness parameters, understanding the information that you're going to need to complete the form. There's a lot of fields that you need to go through. There's a lot of areas that play into one another that will funnel into the page 3 application part. For those of you who have it in front of you, you'll notice that it's an 11-page application. Essentially, there's 3 kind of main pages to it in the end that are going to be where most of the work is done. But it's not a small, easy document to go through, and hopefully this will help guide you. Our plan, though, is to, as information is updated, as guidance is updated, we'll continue to update that presentation and try to update the visuals so that once you're ready to get into the actual calculations for yourself, you can hopefully print out this presentation and just try to go through step by step the best you can and reference, how to fill those boxes appropriately. Okay. I definitely encourage you guys to, one, start gathering the information, and it doesn't have to be the finalized information. Obviously, now we have, it sounds like, coming up on 24 weeks to really use the funds, so you don't really need to rush to do it. But I encourage you to make sure that you can find the application information that you need to submit it, right? So that you're not scrambling to do that later on and stressing yourself out. So run a test example of this at some point for yourself. And I think that'll help kind of ease some of the confusion that you'll have as you kind of go through the application. And, if you have any questions along the way there, that's what we're here for. Okay. And then it'll allow you to optimize your forgiveness in the end. That's one of the things I think the big change that they made will make the forgiveness part a lot easier for you. But prior to that, I think there were people who were running into some trouble actually using the funds within that covered period, that 8-week covered period. So they were trying to scramble to figure out how to use that in a capacity where they'll get full forgiveness, right? So just think about those things because they're going to be important for you over the next couple weeks. Okay. So the PPP actual forgiveness application was released on May 15th. I'm not going to spend a ton of time on this slide. Basically, the week preceding that, they had released additional guidance. A lot of that is what is compiled within this presentation, okay? And it gave us a lot of clarity on how to actually calculate the forgiveness parts. Again, that's going to change because of the 8-week going to 24-week, but it had a lot of the meat and potatoes of how to do that stuff, okay? A lot of the new guidance included options for calculating your payroll costs during the covered period. Initially, when we had the first discussion, that covered period was essentially the day you received the funds for PPP. Your covered period started that day. They made a change, I want to say about a week and a half, 2 weeks ago, to allow you an alternate covered period. That alternative covered period allows you to sync it up with your next payroll, okay? So if you were to get a PPP loan the week before your next payroll, it allows you to, instead of using the day that you received the funds, sync it up with that pay period date, and that'll make it a little bit easier for you guys to end up using the funds. Again, more kind of flexibility in that aspect. You know, and again, the application itself and the guidance just gave us a step-by-step process for having to calculate this information. It will likely be updated again with the new information. And then additional guidance on the reductions that happen if you furloughed staff prior to COVID and you have not brought them back. It gave us additional guidance in what they call the Safe Harbor Act, and we'll go into more detail on that Safe Harbor Act and ensuring that you don't get yourself tripped up in that. It's a little complex in the end, okay? And then one of the frequent questions I get, specifically because of unemployment being so advantageous for people, is that people don't want to come back to work. And we will talk about that in the Safe Harbor part as well. But they basically gave us guidance that stated if you make a good faith written offer to rehire that person and they decline that offer, that won't reduce your forgiveness because of the full-time headcount reduction. Essentially, that will, as long as you've tracked the good faith offer, that will trigger that, what did I just call it? Safe Harbor effect for you, and you'll be exempt from losing that forgiveness part for your loan, okay? A couple other items. The loan itself, most of you hopefully have never gone through a charge-off of a business loan before, but essentially when you have a loan forgiven from a lender, that becomes taxable income for the year for you. And that was a major concern of people, obviously, if the PPP loan becomes income that they have to pay taxes on. Now, they did clarify that the PPP loans that are forgiven will not be taxable income. It is tax-free. However, you cannot double dip and also deduct the expenses that you use, the PPP was used for to pay. Okay, so essentially, if you use the PPP funds for your rent, right, you cannot use that come tax time as a deduction in operating expenses. So that's an important thing, and I'm sure your accountants will go over that with you guys as well. Unfortunately, what it does is it gives a negative effect to that PPP. It essentially reduces the power of the dollar that you're getting from the government in that aspect, because you're reducing or increasing, I guess, your tax liability because of that, okay? And there was one last update to it as well. If you are a business that's had net operating losses in previous years and you carried those forward, you know there's some limitations to that. They've repealed those limitations, so it sounds like you'll be able to carry these forward at 100% capacity going forward for the next couple of years, as long as the net operating loss arose in 18, 19, or 20. That's definitely a tax question that if you have an accountant, you want to talk to them earlier rather than later for, okay? The application itself, if you guys have gone through it, it's got the instructions right in there. That's why it's also 11 pages long. It has 2 supporting schedules, both, as I alluded to, both of those schedules feed into one another. Schedule A basically gives you part of the actual application information itself, and then worksheet Schedule A feeds into Schedule A. which will give you additional information to fill out that Schedule A, okay? So just so you know, those are kind of the main things that you guys need to look at. All right, so this is the start of the application. So hopefully you guys have all this in front of you. This is page 3. Just so you're aware, this is the top page, and we're about to get into some of the information and where to find it. Just so you know, this is the top part, and we'll get started on where to find that, okay? So one thing that you're going to want to do with this is hopefully have readily available the closing documents. Most of them were sent, or I think all of them were sent out via DocuSign to everybody. Hopefully you will all have printed a wet signature copy, wet signed that, and returned it to us as well. That is a requirement of applying for forgiveness, is sending back that wet copy to us, and give you instructions within the DocuSign to do that. But you should be able to access your DocuSign still. I believe DocuSign allows you to do that for some time. So the reason I say access that is because you want to make sure the information matches. Your name, your address, the stuff that you put on your initial PPP application should match. If not, that could cause errors. Hopefully not. Hopefully the SBA doesn't look at stuff so granular like that. To be honest, I'm also hearing that they will not really focus on looking on loans that are less than $2 million. And we're going to get into a spot to not check if your loan was less than $2 million. Because they have a finite amount of resources. But you want to try to prepare yourself for success. So try to make sure that the information is accurate and it all meshes from one thing to another, okay? The PPP loan number, that is on page 1 of your closing document. I'm going to get to the next slide and show you exactly where that is. That is different than the lender PPP loan number. So if you have any other loans with Nutmeg, you're going to know that you have a base member number, which is usually a 5 or 6 digit number. And then you'll see an L and then another 4-digit number after that. And that's essentially what your PPP loan number is. And I'm going to, again, show you kind of where to get that in the end. The PPP loan amount, again, that's kind of pretty self-explanatory. And then the date of disbursement. That's the date that you guys received the funds, okay? So generally, that's going to be the date of your loan documents. In some cases, you may have gotten it maybe say the day after. I don't think anybody's going to really look at that closely at you, so you can likely choose either one of those, okay? So to get that information, again, page 1 of your loan documents is going to have that. See where these stars are right here. There are a couple people who had to be determined on there. So if you do have that on there, feel free to reach out to us and we can get that number for you. But most of you will have that PPP number right there. So you're going to want to make sure that you grab that because that's going to be the number that flows on that page that was right there. Okay. Now your member number itself, if you're an existing member, you probably have what your member number is and you've used online banking before. If you're a newer member, most of you, from what I've seen, have probably signed up in online banking, hopefully signed up for e-statements. If you've not done that, you can go on and do that as well. But the member number is actually going to be right in your e-statements itself. So when you're in online banking, navigate to your e-statement section. You'll come to this page. If you open up one of the more recent statements, you're going to see your member number right underneath your name here. So in the case of me, it would say Shane Dugan over here, and it'd have what my member number is right within that. And again, as I put on here before, that 5 to 6 digit number would also have that L8600. And that L8600 is everybody's SBA loan number, okay? The member number and then that loan number together creates your lender PPP number, all right? Hopefully that makes sense. But if you do have any questions on where to get that information, we'd be happy to help get that for you. All right, so if you guys are looking at, and I gotta look at the page as well. If you guys are looking at page 3 still of the application, again, there's a lot of going back and forth between pages, so I encourage you to have this up. The other information that you're going to need is the number of employees at the time of the loan application, the number of employees at the time of forgiveness, because that will factor into your full-time head count. If you ended up getting a EIDL loan, the Economic Injury Disaster Loan, you're going to need that information as well. If you've refinanced it into your PPP, although that's Most people did not because it took the SBA a long time to actually get the money into people's hands. That is already in the PPP and you likely don't have to deal with it. But if you did not, just so you are aware, that whatever you received for that EIDL loan will be reduced from a forgiveness standpoint, okay? Most people either got $10,000 if you were one of the early birds to get it, or if you were one of the later ones after about a month and a half of not hearing anything back from them, you just randomly found $1,000, $2,000, $3,000 sitting in your bank account. And basically what they did is they prorated it to the number of employees you had up to 10. So if you only had 2 employees, they only gave you $2,000 bucks. If that was not rolled into your PPP loan, essentially that would reduce your forgiveness by that $2,000, okay? All right, and then the payroll schedule. So you just need to choose whether you're on a weekly, bi-weekly, twice a month, monthly type payroll schedule, okay? And that's gonna obviously help the SBA figure out how to take a look at your forgiveness calculation. Hopefully everybody's still with me. All right, so that kind of covers the top section for the most part. We're going to hop down to the next section, although I do have a couple more pieces of information to go over before we get to the payroll part. That is around the covered period and alternative covered period that I mentioned, okay? So basically the covered period is and this is where I said to start updating today, the 8-week period, likely now going to be that 24-week period beginning the date that you received the loan, or now the alternate period, which is the date starting the first payroll date after you receive the PPP funds. So if, as an example, you had your PPP loan funded on April 14th, but your next payroll period was April 30th, you can choose to start your 24-week or 8-week, whatever it lands at period, on April 30th, and then that period starts. Now, it's important to remember that if you start the covered period at that point, all of the expenses, all of that stuff, all has to be within that period. You can't hop from one to another and use the payroll during that period, but then use utilities that you paid, you know, during the, say the 15th, 16th, and 17th when you opt to do the payroll starting the 30th. Hopefully that made sense. So it's important that whatever you choose for the payroll part also includes your other covered expenses as well, okay? But this does give you some flexibility with how you can use it. Now, there was also clarification on what type of expenses can you use and when were they incurred, okay? So essentially, payroll is defined as when the paycheck is distributed to the employee or when the borrower originates the ACH funds, right? So if you pay somebody on April 30th, that would be the day that they considered that pay or that expense incurred by your business, okay? So it's important to just recognize that. Same thing goes for those other expenses as well, okay? So payroll costs are incurred on the day that they're earned, so that, yeah, let's skip over that. I think I just kind of repeated myself there. Non-payroll costs. So that's the mortgage, interest, rent, utilities that help qualify for expenses. Again, that's during the covered period. If you're using that covered period, you need to make sure that those expenses are paid during that. Now, the difference is that you can have a bill from the previous month, and if you pay it during that covered period, it is eligible. So that certainly can mean that if you did not pay March's rent, and you paid March's rent in that covered period, even though it was a past due expense, it would qualify as a forgivable use of that, the proceeds of your PPP loan, okay? So there's a difference now in what was initially communicated in that. Initially, they said basically it was for expenses incurred during that period, but they do give you more flexibility now. So it's basically anything that's incurred during that period or paid during that period. So again, kind of more flexibility, and that's what they're trying to do. Again, the government's trying to optimize everybody's forgiveness, right? They essentially don't want people to have loans at the end of this thing, so they're trying to make it as flexible as possible for you, okay? So where are you going to get most of this information, right? So your payroll information specifically. Most likely that's going to be bank statements to show, compensation to employees. If you filed 941s, likely that. Unemployment tax returns filed during the covered period might likely have that information as well. Last but not least, canceled checks or statements showing the employer contributions to employees, health insurance, that type of stuff, all which is considered payroll. Alternately, if you've got ADP, that type of stuff, likely a report from ADP would likely suffice with your 941s as well. But basically, they're going to, from the sounds of it, look for some sort of validation. And then we have to essentially take a look at that validation, ensure that it meets kind of the forgiveness standards at quick glance, at least. Okay, so these are the type of things that you want to look into being available once you are ready for forgiveness. There's been talk of actually taking out the documents and just relying on the borrower attesting to the fact that they used those funds if you have a loan under $2 million. It sounded like that was going to be a part of what was recently passed, and I have not seen that included in it. So I'm thinking that they're still going to require these documents likely be submitted with the application. Certainly we'll keep you guys updated if that happens to change, but just be ready to supply these types of documents once that forgiveness part comes up for you guys, okay? So these are all specific to payroll and what they consider payroll costs like sick leave, retirement plans, health insurance, that type of stuff. Okay. So, and just to, I'm going to squeeze this over here really quickly. We are now in this section right down here. Okay. So we're moving on from what they considered payroll costs, right? I mean, the payroll costs are not changed from what you used from an application standpoint. Same thing goes with the other covered costs. So the other covered costs are your interest on your mortgage payment, and they specifically say interest to that payment is not encompassing of the principal pay down, only the interest portion of that. And it had to be, again, this goes for any of the expenses below. They had to be in effect prior to February 15th, 2020. Okay, if you just got a mortgage on the property, say in April, unfortunately, that means it would not qualify as of today as a qualifying expense. It has to be something that was in effect prior to 2/15/2020. Okay, but again, it's just the interest. So what we're likely going to look for is some sort of payment history that gives us a breakdown of what your principal and interest breakdown in those payments during that covered period were. Rent obligations, those can certainly be covered as well. And again, basically that's just any sort of rental agreement for personal property or real estate property that you had in force prior to 2/15/2020. We've gotten a lot of questions around the next one, which is what are covered utilities? Unfortunately, I still have not seen very good guidance in regards to how they plan on defining covered utilities. The best I've seen is it includes electricity, gas, water, transportation, telephone, or internet access. Certainly that could be open for interpretation to what transportation means. I think more will probably come guidance-wise in some of that information. You might have some flexibility and ability to justify, a transportation cost being gas that it costs you to go to and from a job site or something along those lines. But as far as right now, covered utility payments do only include electricity, gas, water, transportation, telephone, and internet access. And again, they had to be in effect prior to 2/15/2020. Okay. And as we discussed, right, the paid or incurred section, that will allow you, if you had some of these in arrears, right, you didn't pay your electricity because you just didn't have the means to do it prior to PPP, you can catch up on that as long as you paid it, even though it was incurred before, it was paid during the covered period, that would be a qualifying use of the funds, okay? And that covered lines 2, 3, and 4 in the forgiveness amount calculation on page 3, just so you know. Okay, so I mentioned likely we're going to request documentation around this. That might be the amortization schedule, receipt, or canceled check that helps us break down that information. For a lease, it might be a copy of the lease agreement and a receipt, or a canceled check verifying that you made the rent payment during that covered period. Okay. Last but not least, usually you could use bank statements, that type of stuff. For utilities, a copy of the invoice, showing that those were paid. The invoice from February showing that that was in effect prior to that, right? Because you have to prove, one, that expense was in effect prior to 2/15/2020, and then you also have to prove when you used it during that covered period. So you're going to kind of have to provide two sets of documentation in that aspect. But for utilities, you can likely use your invoice, the paid receipt, if you have a canceled check, account statement, that type of stuff, as long as it shows where it went and that it connects to that utility that was in effect prior to 2/15/2020. Okay. My hope is that, given that they'll have the expanded use of payroll, hopefully people just blow through this using the payroll part of it, and you don't really have to worry about all of these other qualifying expenses, but you do have this option out there, and it will be, from the sounds of it, if this is passed completely and signed off by President Trump, it does sound like that will change to 60 and 40. So again, 60% payroll, 40% other qualified expenses that are these expenses here. All right, so I'm gonna drag this over here really quick. Sorry, guys. I'm kind of doing this all on the fly, but so we've gotten through this first part of the application here. We are now on about line 5 here, and this is where you're just going to start hopping back and forth between a bunch of different forms. And I certainly apologize that they made it as confusing as they did, but that's what you're going to have to do. Okay, so the Schedule A and then the worksheet to Schedule A will feed into these next couple sections. Okay, so if you see right here, as you're going through this calculation, it's going to direct you. And I think that's one of the good things that they did with this, is they put where that information feeds from. But it gets tricky in that if you look here, it says, go to Schedule A, line 3. We're going to go to Schedule A, line 3. Well, Schedule A, line 3 wants you to go to the worksheet that supports Schedule A. So right off the bat, you basically have to then continue to go to what is this document. And that's where we're about to pick up in the presentation. So this document is page 9 of the overall loan packet, okay? Or forgiveness loan application packet. I think I'll just keep that minimized and bring it up instead of dragging it over. All right. So now we're getting into how to determine whether or not you are being affected by a reduction in forgiveness due to triggering one of the two essentially clauses that they have in there, right? Either reducing your full-time head count, which is most of what this is here, or reducing their wages, which is also on here as well. Okay, so that's where Schedule A worksheet comes into play. If you have more than, 8 boxes here, you're going to have to obviously build a bunch of these schedules, unfortunately. So it's going to be a lot of work if you are one of those employers who has 50 or 100 employees to get this information together. There's 2 separate things to note on here, though. This top section is individuals who earned less than or equal to $100,000, and this bottom section is for people who essentially earned over $100,000. And the reason that they separate those out is because the people up here are the only ones you really have to worry about having their salaries reduced to a point where it would reduce your forgiveness. The people who are over $100,000, that essentially does not factor in according to the SBA quite the same way. So they're breaking that out because even if it was reduced, they earn over that $100,000 amount, and it's not going to trigger it like it would for somebody who earned less than $100,000. Okay, so we'll get into that specifically in a second. And then I mentioned the reduction via safe harbor. That's right underneath that little table that I gave you guys, and we will get into that right after the top section. Okay, this is where it starts getting very math heavy as well, guys. So if you don't follow the math, don't be concerned. You have the ability to take the slides. We will continue to update them because it will likely change based off of the change to 24 weeks. Most of this is still referencing an 8-week period in most cases, especially when you get into the actual data formulas that I have in some of the other slides. But just, sorry, try to get this over here for myself. Just know that you do have the ability to go back and try to work through the calculations and examples that we give, okay? So critical computations here are the eligible compensation for each employee, right? That's kind of those top boxes. The cap and compensation for each employee over at $100,000 on an annual basis, that's that table 2. How to make a determination of your full-time equivalent employees, that is a calculation we'll get into as well, but that's that FTE reduction safe harbor part to, again, kind of determine how that feeds into the forgiveness part, okay? One thing to include, again, you're gonna build this all on the worksheet tables. Do not include independent contractors in those tables, right? You guys separated out, or hopefully separated out, your contractors that you pay as a part of the application process. Those people should not make it into those tables either. They are not considered employees for PPP. And again, they would have applied separately on their own for their own individual PPP, okay? Self-employed individuals, they are a little tricky right now in that we still have not received complete guidance on how to validate that information. So essentially, if you were a self-employed individual, you provided us either your Schedule C, and that was what your owner's income was. So essentially line 31, your net income was what they considered your payroll for the year. What they're likely going to do for your owners, and let me step back for a second. The same goes for people who are in a partnership scenario as well and provided your K1s and focused on, I think it was line 14A of your K1, which was your portion of the earnings for the company. They'll use that same 2019 information to just carry over. So basically what they're going to do, from my understanding, is you're just going to pull in 2019's information. They're not going to look at any sort of 2020 information for you. It's just basically solely based off of 2019's information that you use. So that's why it's also very important that what you put on your Schedule C or any of those documents, if it wasn't the filed version, is the version that you're going to use for forgiveness and is the version that you're going to use for tax purposes as well. If you overstated your income in an effort to get more PPP funds, they may catch that, just so you know. They might not, but you obviously run the risk of that, coming back at you later on if you opt to try to reduce your expenses further for 2019. Again, because they are going to just pull in that 2019 information for you as what your 2020 compensation essentially is. All right, so again, table 1 on there is just that annualized compensation for all employees during the pay period for 2019 that earned less than $100,000. Again, they're using that section to help determine whether or not you're going to have the forgiveness part reduced if you've reduced their income, okay? Table 2 is for those individuals who have 2019 income in excess of $100,000, right? Their income was capped at $100,000 and will continue to be for the forgiveness part to this, okay? So that's what the difference between Table 1 and Table 2 is, and why Table 1, if you guys are still looking at it, focuses more on the cash compensation, full-time employees, and then the actual wage and salary reduction instead of just the cash compensation and average full-time employee equivalent. The FTE was a major point of confusion as well, and we do have a calculation as to how to figure that part out in some slides coming up. Okay. So what qualifies as cash compensation for that table? Again, Table 1 on Schedule A worksheet. It's your regular salaries, wages, commission, or similar compensation. Again, the same type of payroll information that you used for the application part will qualify for that. Payment of cash tips or equivalents. just so you know, that is cash tips that are claimed. If you claimed them, they are likely on your 941s. If you did not, and you opted to keep that under the table, just so you know, you cannot use that information in here, and you likely were not able to use that information to help support your loan amount either on the front end of that. I saw that a couple times as well. Again, cash compensation will also be payments for vacation, parental, family, medical, sick leave, allowance for dismissal, and separation of employees as well. All of those would be considered cash compensation. That would go in that middle box on table 1 on Schedule A worksheet. Okay. What cash compensation does not include, so with the 8-week period, basically it had capped people's the individuals had $100,000 salaries at using this 15,384 figure here. That is obviously likely going to change now that you can use a 24-week period. That 15,384 is basically if you take $100,000, you divide that by 52, and then you times that by 8. That's your 8-week covered period. So that's saying that the most during that 8-week covered period that you could use for a single person's payroll was that 15,384. That is likely going to change now, and I think it will be 2833, and that would give you basically $100,000, and the 24 weeks essentially would run out prior to that, but it would still cap that person out as essentially a $100,000 equivalent pay amount, I believe. I think there's more guidance to come out on that aspect and how that might update that figure, so don't take my word for that one, but that is something that is spelled out in the current actual application process itself that will likely be changed, okay? Compensation does not include compensation to employees who are not, their principal residence is not in the United States. If they're outside of the United States, they should have not been included in the application portion. You signed the application stating that. It also does not account for the forgiveness part. And then the qualified sick leave wages, which are some credits that came up in the Family First Corona Act response. Same with the family leave wages for people who were out on that. I believe this is what that refers to. Those don't count either because you're essentially going to, I believe, get some sort of other credit for those type of people. That's probably more your accountant question, just so you know as well. That's a very granular question. All right. All right. The next box to the right of the cash compensation box, again, if you're on page 9 of the Schedule A worksheet, it's to the right, the average FTE. This is helping you determine the average full-time equivalent for your employees for the covered period or the alternative covered period, okay? And again, if this drops, it will likely have a much larger impact on your forgiveness than what it would be if you just reduced somebody's salaries. That's because it essentially takes out that body, that full-time equivalent, and takes their forgiveness completely out of the equation. So the good thing is that they give you 2 different methods, and I'll show you an example of 2 different methods of how to calculate the full-time equivalent calculation for this. But it's important to try to maintain that base or make sure that if it's dropped, it's because of one of the qualifying reasons, which will still allow you to trigger that safe harbor part and not have that forgiveness reduced because of the safe harbor effect, okay? And I'll go over what those specific examples are shortly as well. All right, but essentially, you have 2 options to do this, right? If you work 40 hours, that essentially counts as 1. You can reduce it by 1/10 depending upon how many hours they work. That's what the second slide is here. And I think this will just be easier to understand once we see the math in front of us. But the maximum amount for each employee is 1. Alternately, you can kind of skip the math of rounding to the 10th for people who work 35 hours, 30 hours, whatever the heck it is, and just opt to say, if you don't work 40 hours, then you qualify as 0.5. You have to follow the same process for determining your FTE figure from prior to COVID, and you have to follow that same process for after COVID, right? So if you if you use the tenth method, right, you have to do that on both sides of the equation. If you use the half for anybody who doesn't work, you have to do that on both sides of that equation. And this is where you get the lovely example. So, all right. So for an individual who's looking at that kind of covered period starting April 20th for XYZ company, all right, the average person, employee A, sorry, we'll call them employee A, averaged 45 hours during the work period. All right, that person would be capped at 1. So if you go down to the next part, right, you're going to see that employee A was capped at 1, even though they worked at 45 hours or over 40 hours, right? So if you work 80 hours a week, it doesn't give you 2. You still capped at that 1, okay? Same thing goes for B, that average person, worked 40 hours, that would be that 1. And this example is using the 10th method for C. So in the case of somebody who works 28 hours out of a 40-hour work week, right? Using that 10th method, they would be 0.7, okay? D&E would be an individual. Again, we're still technically on the 10th method here for D&E for this one. D&E would be an employee who worked 20 hours a week, right? So each of them would only qualify or contribute 0.5 towards that full-time equivalent headcount, right? All right. Now, if you use the simplified method to this, and obviously you see in the math in that middle section, so if you use that 10th method, according to that method during that covered period, you would essentially have 3.7 full-time employees. And you want to make sure that on the back end of it, you also still have at least 3.7 full-time employees, or you would potentially have your forgiveness reduced, right? The other method is what they call the simplified method. It gives you a different result. As you see here, with this example, you get 3.5 full-time employees. We're going to use the same exact figures here, but with the specific simplified method. And the simplified method, basically, as I mentioned before, if you don't work 40 hours, you essentially only count as 0.5. And that's what that's illustrating here. So 1 doesn't change at all, right? Anybody who works over still counts as 1. B doesn't change at all. Anybody who works 40 still counts as 1. It's when you get to these scenarios where you work less that basically everybody else at that point is just considered a half of employee, regardless of whether you work 5 hours, 10 hours, 20 hours, 30 hours, 35 hours, I guess technically 39 hours as well. Anything less than 40 hours would be considered that 0.5 for an employee number. As long as you're consistent, that's the important aspect of this. Again, I totally realize that this is very math heavy in that it's just, picking this option versus this option can get very confusing. So that's why it's important to probably go back and just take a second look at some of this stuff. I know we're trying to go pretty quickly through it just because there's a lot of content. And obviously if you go through and you do have questions, we'd be happy to help answer those as well, okay? But that's the method of calculating the full-time head count or full-time equivalent. All right. So again, if the full-time equivalent number ends up being lower in the back end of the equation, that will likely reduce your forgiveness part, okay? And basically, anybody who's over $100,000 is not affected by this. It only applies to those people who earn an annualized salary of $100,000 or less, okay? This may change. So this is referencing basically the way that the guidance came out before, and it set up nicely, I guess, with the 75 and 25% usage. So being only able to use 25% of the funds for other qualifying expenses. I don't know whether this is going to change yet, which is why this says this may change with the bill. It does not directly say that you're going to be able to reduce or not have the forgiveness part reduced if you decrease people's wages by 40%. I did not see any reference to that, so I think we need clarification on that. But my assumption is that they'll probably sync that up somehow, okay? And what that means is basically if you reduce somebody's wages by more than, you can reduce somebody's wages by up to 40% potentially in that case and still qualify for full forgiveness in that aspect. And And again, everything on table 1 and table 2 is an annualized salary. Table 1 being $100,000 in that section, and then table 2 being over $100,000 for those individuals. Okay. All right. So this is the practice you're going to go through with each employee. I'm kind of going to go through it really quickly. I think you're going to have to go through this with each and every employee to determine it, or if you have the luxury of having something like ADP, hopefully that'll calculate it for you and just kick out a nice report that gives it for you. But if not, these are the steps that you'd have to follow to basically fill out that information in table 1. Okay. So step 1, you could determine the average annualized salary or hourly wages for the employee during that covered period or the alternative covered period. All right, you're then going to determine the average annual salary for the employee during the period of January 1, 2020 through March 31st, 2020. You take those two figures, you divide 1 by 2. If step 3 is greater than 75%, and this is where I think it might change to 60%, then there's no reduction that takes place. Okay, so again, you've at least kept, the theory here is that you've at least kept 75% of their wages intact and met that threshold. Okay, and that might change, we will see. But step 5 is if the case is that it is less than 75%, and we're just going to stick with that for this calculation because that's what technically the current process is until the bill signed off by the president. Then that will likely reduce your forgiveness. Okay, the reduction is determined by multiplying step 2. By multiplying the amount determined in step 2 by 75%, and then subtracting from that result the amount from step 1. Again, it's very granular, and it's tough to see with, I think, actually doing an example out. I think I might even have an example of this. I can't remember exactly what the slide is, but coming up. But that's what that process is to figure out if you did not meet that 75% figure, how to figure out how that is going to reduce your overall forgiveness in the end. My hope is that there's going to be a good calculator to help with some of this stuff, guys. Obviously, as things change, people have to change calculators and all that type of stuff. There are a number of people working on that type of stuff as well for us. If that becomes readily available, we'd be happy to share it with everybody. But unfortunately, as things change, that just limited our ability to use a calculator that we can deem is worthy of following the guidance as it is outlined, specifically because it keeps changing. So, okay. So that's essentially the process of determining whether or not your salary is reduced because of reducing somebody's wages. Again, that is the right-hand column on table 1. So this only qualifies for those people who earn less than $100,000. Okay, so again, this is probably an irrelevant example because it's going to change. I think the way that the math will change, and do not quote me on this yet, but I think all you're going to do is essentially in the equation below, replace the 8 times 52 figure by 24 times 52, but unfortunately, I had to kind of go through the math this morning, and I'm not completely confident that that's the case yet. But one of the things we will do is we will update this presentation in the future. We will do an updated one and likely give you a more solid figure at this point. But this calculation is as if it is the 8-week covered period, okay? So basically in this example, the employee, I think it was 52,000. Yeah, the employee was paid an annual salary of 52,000, which tried to make the math look nice in this case, right, which is about $1,000 a week. So you're going to take that, you're going to divide, by 52 to get the covered period amount. That's where that 8,000 came from, right? And then you multiply it in that case by 8 to get the 8,000. Step 2 would be the average annual salary for that individual. If you were to calculate it for January 1st to 2020 through March 31st, 2020, would essentially be $20,000, and you multiply that by 4. Again, this is very granular, so I know it's tough to kind of follow along with some of the crazy math. Step 3 would be take that overall annualized salary from 2019, right? That's where you got the 52,000. You divide what would be the annualized salary for the first quarter of 2020. So that 52,000 is annualized for 2019. The 80,000 is annualized for using quarter 1 data for 2020, and you get that 65%. Okay, and again, if that is below 75%, you are potentially going to have that impact your forgiveness. If it's above 75%, then you are all good, and you do not have to worry about that. However, before you go into checking whether or not that affects that person's reduction and affects your payroll forgiveness, you're going to want to check and see whether or not one of those other safe harbors is applicable. And I have that, I think, on the next slide or two. But if it isn't, basically you would look at this equation, reducing your forgiveness by $1,230, right? So you're taking the difference between what you should have paid them according to the PPP rules and what you did pay them, and that difference is what your forgiveness will be reduced. It's not like you reduce the entire amount like that full-time headcount does. Again, super granular, guys, here, and I know most of you are probably scratching your head going, wow, this math is just stupid, frankly. You know, these are just examples. I think, you know, once you get through 1 or 2 of your own employees, hopefully this will make it easier, or hopefully you have an ADP or something like that that will actually compute it for you. But again, this is just an example to try to represent how to get through the math. All right. What is this one? Hold on, I'm confusing myself over here. Let's skip that. So the reduction in safe harbor. Again, I had mentioned if your full-time headcount is reduced, that's going to potentially reduce your forgiveness, right? So this part's kind of focusing on the periods that you're going to have to take a look at to determine whether or not that impacts your full-time headcount, full-time equivalent. So that FTE, you should probably just start saying that during the covered period. So again, the period is going to look at the period beginning 2/15/2019 and ending June 30th, 2019. And then it's going to cross-reference that with, or use January 1st, 2020 to February 29th, 2020. So you have the ability to use either one of those periods to determine your full-time headcount scenario. For a seasonal employer, and that's the definition of a seasonal employer as determined by the SBA, you could use either of the previous 2 periods or the 12-week period between May 1st, 2019 to September 15th, 2019, okay? So those are essentially the front end of the equation, how to look at the dates for what your full-time headcount is. You can use 2019 figures or essentially the beginning period of 2020. All right, so we get into an example of that. So again, this individual got a loan where we're focusing on somebody who earned less than $100,000 for the period. And again, that 8-week covered period begins April 20th, 2020. So first individual, why do I feel like this is a duplicate slide, Corey? That might have been as I was shuffling things around. Sorry, guys. And some last minute shuffling around, and I feel like I duplicated something over here.
Hey, you made it, man. Don't put me under the bus.
Yeah. Yeah, I think we're going to skip this part. I think this is duplicate of before. My apologies, everybody. I'll have to update that and make sure that that doesn't make it into the new slide. Period. Okay. Yeah. So I think this is essentially going through the equation basically again, but potentially looking at the different pay periods. Okay, that's actually what it is. Sorry. This is using that example of full-time headcounts, and I think for the sake of one time, the sake of not kind of beating this part to death, if you opt to use this different pay period, this is essentially just the example of how to go through that same equation that we did before, where you're opting to use the 10th method for full-time employees, or opting to use the 0.5 for anybody else who is going to use that simplified method. And then basically how to take the data from those other two periods and cross-reference that from one versus the other, right? So using the period beginning in 2019 between February 15th, 2019, and then June 30th, 2019, and then again, cross-referencing that with the other period in 2020. Okay. All right, so I mentioned one of the parts of the FTE, safe harbor part indicates that essentially for certain qualifying events, the reduction part becomes irrelevant. So they're not going to hold you responsible for certain things because they're essentially out of your control, okay? And this kind of goes into the full-time headcount equation. So if any employee was fired for cause during that period, and that reduces your full-time equivalent, you can actually reduce, or you can take that out of the equation. That would be considered part of the safe harbor, and that person would not contribute into the full-time equation on either sides of the table. So you would have to take them out on the 2019's figures, and you'd have to take them out of 2020's figures. If they voluntarily resigned, same thing, right? Again, that's out of your control. If they voluntarily requested and received a reduction in their hours, again, that's not something that's necessarily in your control. And if that factors into your full-time headcount, that would not be something that's held against you. So again, this is a full-time employee or something like that who opts to only come back half-time. If it is their choice to do that and you had to agree to it to keep the business running, that is not going to reduce your forgiveness in that capacity. And then last but not least, for people who basically opted to not come back, again, I'll cover this in another moment, but as long as you track that you gave them that offer letter, that they refused to come back to work as well, that will not contribute to the FTE reduction in the case of this full-time equivalent headcount, okay? All right, all borrowers may ignore the required reduction if the safe harbor is met. So again, if you meet those specific requirements, that just means you don't have to worry about that part, okay? And it allows you to look at two different periods, again, when trying to determine that safe harbor part, again, February 15th, 2020 through April 26th, 2020. And then for the pay periods that include February 2020. February 15th, 2020. Oh man, this is so much harder when you're trying to read it off the screen. All right, I think I kind of went over that part too. All right, so what I want to pull out here, guys, again, is just the part down here. I think this is getting kind of super granular, so. And that, again, is, just make sure that you're making a written, good faith, written offer to rehire that person during that covered period, and that they rejected that. If you can preferably get that in some sort of writing response, email, text, something along those lines, that will certainly support you. Do I think that the SBA is probably going to look at that? No, likely not. I think you're just going to attest that that's the case. But in the case, if you did have a larger loan, you know, that is something to just track, just in case that does come up in some sort of audit or anything along those lines. Okay. All right. So we are going to go back to now Schedule A, right? So we were going over for the most part right now this lovely calculation through these two tables. Most of everything that we just went through was referencing either this cash compensation, full-time equivalent, salary reduction, that type of stuff, or the safe harbor determination steps down here to determine whether or not you trigger that safe harbor clause. Remember that fed into Schedule A over here, where we needed to figure out these top 3 lines, okay? So essentially, those slides basically covered, it was a lot of information. It was a lot of, if you do this, this is what you use. So just make sure that you read those carefully and try to understand how to make sure that you get, sorry guys, how to get the appropriate information for those 3 lines, because I think that that's where most people are going to have the confusion come up and can potentially reduce your forgiveness part the most if you do not do that calculation correctly. What we're going to transition to over next is some of these bottom sections though, okay? And then the owner's compensation part on there. All right, so this is the information on Schedule A. So Schedule A is page 6, all right? So if you happen to have that, I'll give you guys a second to hop to page 6. All right, so we just spent all that time trying to figure out how to basically get these top sections, top line, line 1 on page 6, line 2 on page 6, and line 3 on page 6. So essentially what you're going to do is you're going to get end calculations on those pages. You're going to take that table information and you're essentially going to drop it into line 1 of the cash compensation part, okay? So again, you take the total amount that you entered on the column for that cash compensation column on table 1, but only table 1, and then you're going to drop that in that line 1 figure. Line 2 is going through Schedule A, table 2. Again, you're taking all of that full-time equivalent information and you're dropping that information as you went through into, from table 1, sorry, into line 2 there. Again, so this is why you're kind of hopping back and forth between documents. You're having to fill out the worksheet that then feeds in the Schedule A. And then as you guys will see, the Schedule A will then feed into page 3, which is the actual application part, and then the forgiveness part itself. All right. So line 3 has to do with the hourly wage reduction box. Again, that's that box all the way to the right on table 1. Again, so you're going to tally up all that information. If there is any sort of wage reduction, then that's going to go there, and you're going to drop that into line 3 of page 6, the Schedule A. All right, and then on table 2, that's where the employees who earn over $100,000 come into play. Again, this is likely going to change because the 15,384 cap that previously was limited by the 8-week covered period is likely going to go away and likely will now be 20,833, I think is what it was. So what you're going to do is essentially take that last box on there, because there's only 3 boxes, I think, on that page. You're going to use that information and then again drop that onto line 4 here. All right. Line 5, enter the average full-time equivalent from Schedule A worksheet table 2. Again, so that's where you know, the second table is going to come in play for those individuals who earn over $100,000. You're going to take that information from there and again drop that into line 5. All right, that covers all of the cash compensation part, and that is probably the most complicated part of it because you're focusing on all of these income adjustments, different time periods. Now we're getting involved in different covered periods. So it's complex and it's going to require you guys to definitely take a look at what periods you're using and how that's going to impact your equation. The next couple lines are a little easier. I'm going to bring this over here again. So if we go to line 6 here, 7 and 8, all right, this is where we're doing the non-payroll. I mean, it's still what they consider payroll compensation, but it's not cash payroll, right? These are your costs for health insurance, retirement costs, state and local taxes. Again, you use that information in the application for origination to help get PPP proceeds, and they will take that information as eligible payroll costs for that as well. Okay, so again, line 6 through 8 is focusing on what you spent in total for your employees on health insurance during that period, retirement for that period, and state and local taxes. One thing to know for that, and this is specific to self-employed people, most of those are all group benefits. It is group healthcare that qualifies. They did clarify later on that unfortunately, if you're a self-employed person and you have your own individual insurance that you pay individually, that does not count as group insurance. It's specifically group insurance, group healthcare insurance, group retirement benefits that would qualify for line 6, 7, and 8. Same with taxes. Okay. And this just kind of restates what I just said there. Payments required are for provisions for group healthcare benefits, including insurance premiums, payments for retirements, or state and local taxes. Those amounts are in addition to the annualized compensation cap of $100,000, right? So the compensation cap of $100,000 is the cash part of the equation. These are not considered cash benefits for the $100,000 cap. All right, so those of you who have employer income in here, this is more pertinent to you, and you're going to see this again on, so we've kind of covered 6, 7, and 8 on Schedule A here, but we get to line 9. So unfortunately, some of you may or may not have qualified for this part because the SBA took a little while to actually get the cash compensation for owners out there and what people could use for that. Initially, they said, excuse me, draws, that type of stuff didn't qualify, and draws still don't qualify as cash compensation. And where they ended up landing is essentially using your net earnings. In the case of partnerships, right, your portion of the net earnings that are on your K1, okay? And that's where line 9 comes into play. It's looking at the owner, self-employed individuals, general partners compensation, all right? And it's going to, basically what we can tell, carry over those figures from 2019, as I said earlier, right? You're not going to have to supply any sort of payroll documentation to show that. They're just going to look at your 2019 compensation and kind of carry that over. This part where it talks about the capped part being $15,384 is now, again, likely going to be irrelevant because of the change to 24 weeks instead of 8-week period. One thing to note, just so you know, and what we're waiting on guidance on is guaranteed payments. Guaranteed payments likely will count as cash compensation for those self-employed individuals. So if you looked at your K1, generally your guaranteed payment is going to funnel into your overall, I think it's 14A on your K1, your portion of net earnings for the company. It will factor into that. So we believe that the guaranteed payments that you receive will just count towards that figure in the end. The tough thing is that, again, if it's carrying forward 2019's information, if you applied prior to the SBA releasing some of this guidance and you as the employer did not get part of your income added to the equation, you might not have this in there anyway. So you've kind of been unfortunately gypped in the fact that the SBA took a while to actually release the guidance in that aspect. And if you applied prior to that, then you likely don't have any owner compensation even factoring into your PPP. You only have your employees' wages factoring into that, okay? But specifically, line 9 is in regards to those owners, self-employed individuals, and general partners. All right, so we've gotten basically all of Schedule A and then Schedule A worksheet completed at this point. And like I said, those documents help funnel page 1, which becomes the full application, which outlines the forgiveness part for you guys, okay? So we went over this already. I had pointed you guys where to get all of this information, what the covered periods, having to elect what the alternate covered period is here. I think I might have skipped over this though. One thing to make sure that, and I don't think there's a ton of them on the call, to be honest, but one thing to make sure, if you did get a loan that's over $2 million in PPP, make sure you check this box. If you did not, do not check that box. I believe that what the SBA is going to do is if you check that box, they're going to likely audit you because what they've said is that they are going to look at people who received loans over $2 million and they're going to be a little more heavy-handed in regards to the scrutiny that they receive as to whether or not they needed the funds in the end. So don't jeopardize and make your life more difficult if you got a loan under $2 million and check this box in the end. Just leave it blank, leave it alone, and you likely will not have the SBA worry or bother you guys at all. Okay, so we went through, again, at this point, we went through this section up here, the payroll, non-payroll costs. We went through how the full-time equivalent may reduce your information again. So we filled out Schedule A at this point, which also came from the Schedule A worksheet, but the Schedule A worksheet gave you what would go on line 3. So you would take that line 3 of Schedule A and just bring that forward onto page 3 of the PPP application, okay? And same thing for the next couple lines as well. Again, it's looking back at those other previous forms, or in the case of line 6, right, adding all these figures up here and then subtracting number 5 to figure out how much that might reduce your potential loan forgiveness. Basically, at the end of the day, if you continue to follow the schedules and the worksheet, you're going to have enough information to continue to drag and drop as many of the figures here to work your way down. And you're going to, again, basically take a previous line, multiply it by a different line to get this line, right? And you're then going to look at how that impacts, well, this is just going to be your PPP loan amount, but you're going to take a look at how the payroll cost affects the next part again. So you divide line 1 by that 75% and determine whether or not that impacts that here. And then overall, basically what you're doing is you're taking 8, 9, and 10, and those are funneling into the forgiveness amount. Hopefully, if you've done that, right, the loan amount here and this part here should be the same figure. If they're not, it's because you did something in the equation that signified you didn't follow some of the guidance and that impacted your overall forgiveness here. All right, so it's important that when you're looking at line 9 here and you're looking at line 11 here, if you anticipate full forgiveness and you're not seeing those two add up, it is likely because of one of the other parts of the equation that you did up here that was impacted by your full-time headcount being reduced, that was impacted by you reducing somebody's wages, that type of stuff. That's where kind of the math from those other pages comes into play, okay? That was a lot, guys. It was 50 minutes of not fun math. And this part, the forgiveness part, certainly worries me a bit. My hope is that the SBA will try to make this a little easier. They're trying to do that based off of some of the stretching things out, which should allow you to just, you know, not have to worry about the 8-week covered period and it reducing the amounts as much, because 24 weeks is going to allow you to essentially use as much of that money as possible. But, you know, I'm sure we have some questions out there. Happy to do the best I can to try to answer them. If they are very granular and math focused in a specific, you know, part of the equation or box, it might make sense to have a separate conversation outside of this in the end, but happy to take anything that's kind of more general in nature in this.
All right, so thank you guys. Shane, thank you as well. So we're gonna get to questions now via the chat. I've been keeping an eye on all the questions in there and been chatting with some of you through the private chat. So we're gonna get to the questions in the order that they were received from the beginning. Couple just cleanup notes, just as a side. Shane, do you mind sharing your screen one more time real quick, just so I can get the link up there and the
Sure.
phone number? So I'm going to type you guys
Jump
out.
done. There we go.
All right, so just go to that last slide for me. So I'm going to type out some information. Oops, I did it to just one person. Let me do it to everybody. Sorry, Charity.
Corey, can you see the last slide?
Yep, we're good now. No, I'm sorry. This is the first slide.
Yeah.
All right, there is the email address for you guys for reference. I just put it in the chat. It's now on your slides as well that Shane is showing. So again, outside of the questions that we're about to answer, if there's anything else, and like Shane said, anything that has to do with any sort of equations or math, we're not going to get to in this forum. I would highly recommend, though, you do email those questions to that email address I put in the chat or the phone number listed on there as well. Those will get right to Shane and his team. The phone number is through our call center, and then they can direct you to the lending department as well. Another side thing, just if you joined late or you forgot, because it seemed like forever ago when we started this, this video will be available on our social media platforms, Facebook, Twitter, and LinkedIn, and we'll have a link on our Instagram as well. So if you need to reference back to this video and Shane's work, you can do so anytime. The slides, again, were sent to you in the chat as well if you need to reference them, and they're going to be on our website. So this will be available for you 24/7 to look back and reference. So that being said, let's get to some questions. And the first one came from Charity. And the question is, how do I know if my EIDL funds affect the PPP forgiveness?
If you did not roll the EIDL funds into your PPP loan, then it will likely impact your forgiveness. Essentially, what should have transpired if you had an ELID loan and you had not received a PPP loan, you should have rolled that into the PPP loan because it could have been a part of the forgiveness. So what they're doing is essentially saying that if you did not do that, then they gave you an extra $1,000, $10,000, and they'll just reduce it off of your forgiveness. So whatever you ended up getting, if it did not get roped into your PPP funds, it will likely reduce your forgiveness, from what I understand. Here's the chat, though. Here it is.
You should still have it near the bottom.
There we go. Yeah, it minimized on me.
You can keep the eye on the bottom, Shane, as the responses come in, and I'll ask you the questions from the top. So next question was from Jay. Does retirement and healthcare go into the $100,000 annualized max per employee calculated amount, or is it separate?
It's separate. They don't consider that cash compensation. That is more, I guess the best way to put it would be a fringe benefit compensation. That does not count towards that $100,000 cap.
Okay. Question from Elise
or
Elias. Sorry, I don't know if I got that right, but how do the proposed changes being 8 weeks to 24 weeks, and the 60 versus 75% payroll, impact PPP forgiveness on a sole proprietorship with no employees?
Can you repeat that one? Where are you, Corey?
It's right near.
It's
still very near the top. You know what? I'll chat it for you in link as well. Just so
no, just point me to whichever one you're on. Who said that one, and I'll just try to.
Sent in at, I don't have a timestamp on it. It's from Elise. I just put it.
Here we go. Okay, I got it.
Yeah.
All right. So how do the proposed changes, 8 weeks to 24 weeks, impact PPP for? I don't think it will honestly impact the sole proprietor. Essentially, a sole proprietor is just carrying back or forward 2019's information. So I don't think that that's really going to change anything for you. It really only changes if you've got employees.
All right. I have a question that was sent to me, so you won't be able to see this one, but can we talk about PPP versus unemployment insurance? That was the question.
Sure, you can't have both, I'll tell you that. So, your PPP was meant for businesses to keep people employed so they didn't go on unemployment, right? So one of the common things that's coming up and the common questions I've got is that people furloughed people. The people that were lucky enough to have unemployment respond, of course, there's a ton of people who are unfortunately in the scenario where unemployment didn't respond, and they're still waiting for that. But what they found is that they earned more money through unemployment because you got an extra $600 per week kicker as a part of that. So in their mind, it does make sense to go back to work and work for less money when I could sit at home and do nothing and get more money, right? So, you know, basically employers are struggling with those people not wanting to come back. Now, in theory, if you're the business and you offer that employee a job or to rehire that job, they are no longer legally allowed to claim unemployment per unemployment. You're actually supposed to tell unemployment that as well, from my understanding, that you wanted to bring the person back so that their unemployment no longer technically, you know, they don't qualify for unemployment at that point. Now, one, you know, to be honest, they're so, and unemployment is so over inundated right now that I don't know that they'd catch it, frankly. For you guys as the business owner, I think what's important is to document the fact that you tried to hire them back and that they refused to come back, and that your PPP loan will not be reduced because of that. You obviously can't control whether or not some people come back in that case. One of the other things that they did say is, okay, if what you have to do is offer your employee a bonus to try to get them back, that is okay, as long as you don't go over that $100,000 cap, essentially, because unemployment shouldn't give them more than that anyway. As long as you don't go over that amount, you can technically give a bonus to an employee to entice them to come back to work, and that will still be considered use of cash compensation from a payroll standpoint. Hopefully that answered the question for you guys. But in theory, you should not be able to do both at the same time.
Speaking of payroll,
whether they catch it.
On the note of payroll, this question's from Jim. He did have to leave a little early, but I'm going to ask it anyways because it seems like a good question. Jim asked, "Can I shift his payroll period forward or only back?"
You can only shift your payroll period forward. You can't really shift it back. I'm not sure I understand what his question is in that aspect, but essentially what I think he's asking is how you elect that different covered period. And the example I think he's using, applied and get paid until May 1st. Okay. So his question is basically saying he might have gotten the loan around April 1st or some point in April, but the first pay period that he had was May 1st. So what you can do as a business owner to maximize your PPP forgiveness is consider your covered period starting May 1st in his example. Okay, so you can move that covered period forward. You can't really move it back. So I don't know what that part is coming from, but maybe there's just a little confusion there. But you can move it forward that one pay period. Now you can't do it more than one pay period, from what I understand. It has to be the pay period subsequent after you receive the funds. So you know, if you're on a biweekly pay period, that doesn't mean you can shift it to a month out, right? The most you're going to be able to do is basically a biweekly period out.
All right, question from Charity. So if our 10,000 EIDL was not refinanced into the PPP, do they automatically owe the 10,000?
You're going to likely, that is a part of the application that you're going to have to put that information in, and it would come to the end part of your figure, it would reduce your forgiveness by that $10,000.
Question from Sandy. What if you received...
Hold on one second, Corey. I think I had there's a private question in there. I'm not sure that you can see that, but basically it's kind of the same thing. And that's in, what if you received the Connecticut one, which is the DECD Recovery Bridge Loan? I do not think that has anything to do with PPP periods. So that's not going to factor into the equation anywhere, factor into the formula. It's only the EIDL loan. So the EIDL loan was directly from the SBA. PPP was directly from the SBA. Those two interact with one another in that case. The DECD loan, if you were lucky enough to get that, I don't think factors into that period.
Thank you.
Go ahead, Corey, sorry.
Question from Sandy. What if you received the DECD Recovery Bridge Loan and the EIDL?
That's what I just
EILD.
Oh, you could. I think apparently you could see that one too. It said private to me, so that was what I just covered though. So the DECD loan does not affect. That's okay. Does not affect the PPP loan forgiveness, from what I understand.
Okay. I have a question from
Nor do I think it
John.
matters if you got the DECD loan and the EIDL loan. I think those are two separate things too.
Question from John. If we did not check the box for utilities on the PPP application, can we still include them on the forgiveness application?
Yep. So you're basically, for the most part, as long as you've covered it for those, you've used it for those covered costs, regardless of whether or not you check that box in there, you should be fine.
Question from Deborah Glass. Can you address sole proprietor situation? And if so, what's the documentation she will need to submit?
So they haven't told us that yet. And that was one of the slides I had covered in that. It sounds like they're going to just basically use your 2019 information that you provided. So you're not going to have to provide any payroll documentation as long as you don't have any other employees or anything like that factor into it. The only documentation that you might have to provide would be if you used it for qualifying expenses like mortgage, rent, utilities, that type of stuff. So the payroll part likely is just taking your 2019, which you already, Schedule C or K1s, which you already provided. Now, there are a couple individuals who applied as a sole proprietor prior to them releasing the guidance that stated that you had to actually submit your Schedule C with this, regardless of whether it was the filed version or not. So there are a couple individuals that I know of that likely provided just like an income statement that we use their net income here with. If you're
Shane, you cut out a little bit.
That all feeds in kind of together. If not, that could potentially impact your forgiveness. They might not catch it right away, but if they do an audit of what you got on your PPP loan and compare it to what you get on your taxes, and I'll give you an example of somebody who, a lot of times in finance, I get profit and loss statements that tend to have a lot more income and less expenses, and then come accountant time, your accountant does some magic and they reduce your overall tax liability, right, by reducing your net income. And that's sometimes by taking at-home expenses, those types of things, and funneling it through your business. And that's totally legit. There's nothing wrong with that. But what that does is it reduces your net income. And what we did is we used your net income to figure out what you would qualify for as a sole proprietor. So if those things don't match up and they catch that could impact you later on. Now, do I think that is going to get caught by the SBA if you likely have a small loan? Probably not. But that doesn't mean that they don't have some magic software in the back end that somehow looks at that and it comes up later. So just be careful with that. If you use some sort of net income figure to use as your payroll as a sole proprietor, just make sure that from a tax standpoint, that's likely where you end from a net profit standpoint too.
From Vicky, how does it work if the owner takes a paycheck of part of his income? Not sure if I quite understand that one. How does it work if the owner takes a paycheck for part of his income?
So that would factor into just your regular employee wages. So you would likely have provided some sort of payroll documentation, that type of stuff that supports or included the owner's income from a W-2 standpoint within that calculation. So basically, you're going to supply that same equivalent information, the 941s, whatever it happens to be, to verify the payroll compensation part, which would be separate than the owner's compensation that's directly attributed to net earnings, that specific figure. So.
From Charity Lane, does cash compensation include pastoral housing?
I believe it does. I'd have to I'd have to double check the actual church guidance. You guys have a little bit separate guidance because of some of those fringe benefits that are normal for churches. If I'm jog my memory correctly right now, I believe that housing allotment does, as long as it does not go over that $100,000 cap. They do consider that cash compensation that contributes to the $100,000 cap, but they'll at least allow it to be considered qualifying payroll for that person. I think that there's other similar compensation, if I remember correctly, as well. But I can likely provide you the specific guidance around churches separately to this. Good question, though.
Question from Elise. How should a new company that used 2020 payroll costs to apply for the loan complete the forgiveness application?
Use 2020 payroll to apply for. That is a good question. I think one of the slides on there had a specific period, and I think I kind of glanced over it, so my apologies for that. But I believe one of them covered what to do if you're going to use the first quarter figures to determine the forgiveness part of your application and how that contributes to full-time headcounts, that type of stuff.
Filtering through here. From Ray, sorry if I butchered that. Are employer payments to health savings accounts counted as health insurance in addition to health insurance premiums?
Trying to remember if I saw that one. That might be something we have to follow up on, Corey. I don't if it is employer paid, then I believe it does. If it's employee paid, then no.
Okay.
We'll have
Ray,
to,
if you have any other
somebody
questions
note that,
on that
and
one.
Yeah,
Ray, I have your Ray Porter Campbell. We have your email, so we'll reach out to you after this call. Do a little bit more research for you.
A couple things. I know we glanced over this really quickly because we weren't going to get into the math questions, but I saw this in there twice. So both people referenced the fact that my 2833 is likely incorrect. The way that I got that is basically by capping the 100,000 mark, right? So per person, that 2833 is essentially where you would cap out at $100,000. So yes, 24 weeks would technically give you a higher number, but at $100,000 you're capped. So essentially you're using an equation that gives you a higher amount than $100,000. So I don't think that the 46,000 that you guys used in those examples would actually make sense. I think it would still be that 2833.
Thanks. Yeah, I was sorry for those guys that I was glancing over the math questions. We're going to keep those to private conversation. But thanks, Shane, for getting that. So question from Jay is, and I think we kind of glanced over this, but just as a refresher, if retirement and health is considered a guaranteed payment for owners, how does that affect the $100,000 cap? Is it considered non-payroll cost for employees and outside the $10,000?
So I guess how is it funneling into that K1 would kind of be the question there. If it's specifically on line 4 as a guaranteed payment on your K1, and for those of you that don't have to worry about K1s, sorry. But hopefully if you do, you know what I'm referencing here. If it's in that figure, it would be considered cash compensation and subject to the $100,000 cap. If it's not, then I'm assuming maybe the question at that point is that the person tends to pay for it from like a reimbursement standpoint, and then I don't think it would qualify. That might be one we want to pull out as well, Corey, and I'll have to follow up on that one.
Yep. All right, so that's the questions. Michael asks, thanks for the EIDL explanation, but he's asking, what about EIDG?
The heck is an EIDG? Somebody want to jog my memory here?
Mike.
All these acronyms.
Mike is not on the call any longer, so at least I don't see him on here.
Let me just Google it really quickly. Maybe that'll jog my memory.
Everyone's saying the grant. Oh, Michael's still here. I'm sorry, I didn't see you. An EID grant instead of a loan. That's the question.
It looks like it's treated the same from what I see. That's probably something we'll want to pull out as well, Corey.
Okay.
I'll follow up on that one.
From Charity Lane. So what if we hired people because of the PPP, but we'll have to let them go once the PPP funds run out? how do we handle that in the forgiveness application? And just for a couple other items in there, they're employees as of the last day of the 8-week period, but by the time the forgiveness application, they will no longer be employees. How do we know if that's between the EIDL or the grant?
Oof. There's probably going to be guidance to help with that one, Charity, in the future. The best I could tell you is that if it reduces your full-time headcount in some capacity, then that could have ramifications from a forgiveness standpoint. If it's outside of that period, and this is where I think we need to learn more about how the 24-week period kind of impacts this. But my thought is, if you're within that 24-week period and that happens, they are likely going to have some sort of carve out, to say as long as you use the funds in totality for covered costs during a part of that 24-week period, then you're covered. But I think there's more guidance that needs to come out on that because it just got passed. So,
speaking on that as well, what about employees who voluntarily resigned during the calculation period? If this reduces the total headcount, are they still penalized?
So no. So if they voluntarily resign on their own, right, or you let them go with cause, or they don't opt to come back, those trigger the safe harbor clause in this, and that you can essentially remove that person from that calculation, and you won't have your loan amount reduced, the forgiveness part reduced because of that. It's more if you, as the business owner, opt to not bring people back, or you opt to reduce their salaries past that part, where you run into reduction in forgiveness. If it's because of something outside of your control, like they resign, you have to fire them because they stole or something like that, right? Then you aren't going to be impacted in that case.
I see some more questions here on the grant. Just for Charity Lane and Michael Drinkwater, we will get back to you separately in separate emails from Shane. So we have your emails from the invite here, so we'll be contacting you that way. Question from Sandy. They received an EIDL, but it was a lump sum, no advance of 10K nor 100K per person. We applied early. There was no box to check for the grant, and I don't believe anyone went back to put it in. Does any portion of the loan affect the PPP since there was no advance?
Well, if you received the funds, then that was an advance. So if it wasn't refinanced into your PPP loan, then it would reduce your PPP forgiveness for whatever that amount is. And that shouldn't be more than $10,000. Again, that should be the most that anybody got through that program. So at most, if you did not factor in your EIDL loan, then it's going to be at most a $10,000 hit on your forgiveness part.
Michael's asking an updated guidance on owner comp forgiveness when available. Is that available quite yet? Or are we still waiting on that?
No, so that's part of what I was covering, where it sounds like they're just going to carry over your 2019 Schedule C or K1 and just use that. I think that's the guidance that we still have yet to get, though. That'll come out at some point.
Charity Lane asked if, oops, sorry, go on.
I was going to say, we do plan on doing another one of these as well, guys. We'll probably do another one or two at minimum as guidance either comes out or as things change, like the 24-week thing. Today was kind of done on the fly with the last minute changes and some bad timing, unfortunately. Today was also the day that they rolled out all that other stuff. So, we'll have to kind of update this accordingly in the next couple of weeks with updated information.
Yeah, and just so everyone's aware, we will be doing we've been doing these PPP webinars about every 2 weeks or so. So keep an eye on our social media platforms or emails or our website for the next one with all those updates. It will probably be within the next 2 weeks. So just keep an eye out for that as well. Same format as this one as well. All right, last question on here, and then we're going to call it a day from Charity Lane. If there are employees through June 30th and we choose to keep them on the 8-week period instead of the 24-week period, is that okay?
They are employees through June 30th.
It's at the bottom of the chat if you need to reference it.
Yeah, no, I'm actually reading it now. I'm not sure I understand it. They are employees through June 30th, and we choose to keep the 8-week period. I don't think so, Charity. I don't think we have enough clarification on how the 24-week period changes some of this stuff, unfortunately. I think you're going to have to sit tight on that in the next week or so. I would anticipate the SBA having actual guidance. So again, I kind of covered this before. What typically happens in the case of laws and changes like this, right? So the House and the Senate has to go through and pass their own prospective bills. That comes together into a document that gets sent to the president. He signs off on that. Once they have that official enacted law, the SBA itself still has to take that information and actually release what's called guidance to financial institutions and people that tell us how to use that information. Because President Trump hasn't signed it, any of that stuff, that guidance is yet to come out. It probably won't come out for another week or two, I would think at most. But unfortunately, we're going to have to wait for that before I think I can give you that answer. My assumption is that as long as you use the funds for qualifying expenses in either an 8-week period, 24, 22, 16, as long as you use it for those qualifying expenses, you're okay. If you use it in a shorter time frame in the end. Now, I can't guarantee that that's how they're going to roll that out, but that's what my thought would be. So to answer, I think your earlier question too, if you run out of PPP money and you have to let people go at that point, I don't think that that's necessarily going to say that you can't do that from a business sustainability standpoint, as long as you can verify that you've used the money that you did get during whatever time period during that covered period for those qualifying expenses up until the point where you ran out.
We'll do this last question because it's a follow-up of what you were just talking about from Sandy at the bottom. Since the grant isn't mentioned in the loan docs, it came up in a lump sum. Am I subtracting 10K or 1K per person on the PPP documentation?
You're subtracting whatever you received. So if you got 10,000, you'd subtract 10,000. If you were one of the people who got it later and they reduced the amount that you got to $1,000 per employee, then it's whatever that figure is per employee.
All right, guys, we're gonna wrap it up there. We've almost hit the 2-hour mark. It's a new record for Shane and I. So, couple again cleanup things.
Man.
Thank you for everyone that did end up staying through this whole time. We really appreciate it. This recording will be available later tonight on our social media platforms. You will see it on our Facebook, our Twitter, and our LinkedIn. We'll be doing another one of these webinars within the next 2 weeks with Shane and I as well with the same platform. It's just with all the content this time, we wanted to make sure we kept the questions to the end so we can get by all the presentations. So that being said, thank you guys for calling in. More importantly, thanks Shane for putting this together and being knowledgeable. I definitely wouldn't have been able to answer those questions, but thank you guys for calling in. Have a great Thursday, great weekend, and please stay safe out there. And have a good day, guys.
Thanks, everybody.